All right, we've had some big moves in the market today. Nvidia finally hitting the target that I gave a couple days after earnings. At that time, the stock was over $1,000, and I said that we were going to get to 1,280. Today we got up to 129. We kissed it, and we've come back a little bit. I'm going to take you guys into the charts and tell you the significance of this price move because it does matter. It's breakout above 125, a gap up, and it does signal that the stock can go higher. Now, I'm going to tell you exactly what we're going to be watching for in the charts on Nvidia over the next 24 hours. I'm also going to cover some Tesla and a couple other warnings and news stories that I saw that I think will be of interest to you guys. This is the Stocks with Josh show. This is going to be a quick and concise coverage of these couple big tech stocks that are on our radar right now because these are the ones that are moving. So what has given Nvidia the additional boost that it enjoyed today? Well, that's Broadcom. Broadcom said they couldn't get a hold of enough chips, that their business is bursting and growing at an incredible rate. That is ticker avgo, and the stock jumped 13%. Now, I want you guys to understand something about these types of moves. They're big price jumps higher on a big volume bar, but I'm going to give you guys some of my experience through trading the markets for a while. When you see a gap up like this, some people think that it's the absolute end of the move. And I have learned that when you see a massive gap up at the top of a channel, so it gapped up at resistance, that typically signals a change of character. And before you take any type of short position or before you sell your stock, you want to give it at least 3 days. That's my rule of thumb for a gap down or a gap up. And I'm going to take you guys into the Broadcom chart, and I'm going to show you at another time when it did what it did today, how it performed over the next 3 to 6 months, and I think it'll surprise you. This was a massive move. It was a surprising move, but Wall Street understands that it's because something has changed. It's no longer business as usual over there, that they've got a catalyst that's going to stay persistent for months, quarters, and possibly years ahead. So let's just take a minute. Let's go into that chart. Okay, we're looking at the avgo Broadcom chart on the daily time frame, and it is very unusual, very, very unusual for the stock price to be above this red resistance cloud. It's very unusual for the stock price to break into the top half of the red resistance cloud, let alone be above it. And the LUXALGO indicator is giving us a sell price, a sell zone or take profit zone that's significantly beneath where the price has ended up going. And so this is truly what's referred to as a change of character, a massive breakout move. I like to go back in history, guys, and see when has this happened in the past. Well, back here we see that once before Broadcom had a really big move back in 2023, and it got above the cloud, and the very following day it followed up with even a bigger move. Now that did turn out to be a rejection candle, but let's look at something very interesting. Let's draw a trend line at the top of the first candle move outside the top of the red resistance cloud of LUXALGO. So you can see that it wasn't time to sell at the end of that day, even though it gapped up and even though it broke above the cloud and did something very uncharacteristic after having run up for about 2 weeks. It wasn't time to sell. This move here was over $123 the following day, and after that, the ending price, let's say this was like today. So let's say that this candle is characteristic of the candle that we got today on Broadcom. It was worth buying Broadcom back in time, even though it broke out the way that it did and was pretty frothy. It was worth buying at the end of today because that price, there would have been opportunity to make a huge profit the following day and within the next 2 weeks. And as you guys can see, the price only went higher and higher. And the base price was the end of day price on the breakout candle. So that became the base. Over the course of time, it became the right place to buy, not the right place to sell. And so we're in a somewhat similar position, and there could be some folks who are thinking, well, I really want to take profit because this move is just incredible. It's crazy. And I'm not telling you not to take profit. All I'm telling you is that this does not mean that the move is over. So where I would go with it is that if you get a close back beneath the bottom of this price, and at the moment that would be 1,650, well, then you know that this is going to end up being a candle pattern that's referred to as an abandoned baby. That's where you get a gap up, you get a candlestick, a gap down, and another candlestick. That would actually be a confirmation that this was just a pump and dump moment in which you should be taking profit. So I wanted you guys to have some perspective on this move on avgo. It was an incredible breakout move, and with the stock split coming for them, this could be a bullish season ahead. Put your stop loss in somewhere between 1674 and 1650. That would be very reasonable to lock in the gains of this huge move. Now, this obviously had a massive effect on Nvidia because what was driving Broadcom's price was the opportunity that they were getting with new Nvidia chips and the growth and birth of AI. So it means all of Broadcom's success is just going to go back and feed more money into Nvidia. And it's just more good news for the #1 growth stock in the world. And so that's why the stock has pumped. Now, I'm going to take you guys into that chart because the move today was also technically significant, and I want you guys to see it with your own eyes. So let's go check that out. Top 3 tech stocks that may fall off a cliff this month. So this is a warning from some analysts that are basically saying that the RSI on Nvidia and Apple is significantly over the 70% mark. And so this is just really a classic warning about stocks that get overbought and that have been in the overbought mode for a long time. And we know that to be true with Nvidia. But let's just look at the Nvidia chart. Now I'm going to point out some things. I'm going to tell you guys that I gave you the line in the sand was 125. I gave you my projected target was 128. We gapped up and got a candle to 128, which is beautiful, right? But we are above the take profit on the LUXALGO, and one of the most significant things I want you guys to see is the bearish divergence between price and volume. So price is steadily moving higher very quickly, actually, and volume is steadily moving lower, getting lower and lower. That is also referred to as bearish divergence. We've got 3 fundamental factors to charting, which is price, volume, and momentum. Now, on the momentum chart, the RSI momentum for Nvidia has actually come up a little bit, causing it to not reflect as much bearish divergence as it did yesterday, because this was a momentous move today. And so the momentum does show mild bearish divergence, but the real problem that I see in regards to this chart is the volume bearish divergence. So price has gone higher, momentum had been lower, but is now flat, but volume is one of the biggest negative reads on the Nvidia chart. But where could this continue to go? Because we're clearly getting a blow off top for Nvidia. Now, by looking at these charts, we have called each and every price point over the last couple months correctly. I want to be clear with you regarding Nvidia so that you guys have the most up-to-date prediction. If we close this week back beneath 125, it means that that there is a reversal here. And the lack of volume is a signal of that. However, if we close this week above 125, I'm going to call that a confirmation that this move is still going to be pushing higher the entire time that the S&P 500 is making that push up to 5,500, like I've been talking about, as measured by the SPX. So until the S&P 500 reaches the target that I believe it will absolutely inevitably hit, it means that Nvidia, the #1 growth stock, it can still climb. Where can we go? We can go into 130, and ultimately the target that I have set, now this is the new max high target, okay, is $140. Let me show you guys that in the chart. So what this basically does is it puts us at the very top of the red cloud. And like you just saw with Broadcom, that actually blew above its red cloud of resistance, it's putting Nvidia at the very tip. And hot stocks and hot cryptos do often come up to the very top of the cloud and touch it and reach a peak at that point. 140 has now become our new target for Nvidia. Now, again, I want to remind you guys, I want to always keep it clear, if we close beneath 125, then we need to see that as a breakdown, and we got to look for structural support beneath us. Now, there are structures of support beneath 125, such as 112, that I think we would come back to and bounce. But if the overall market peaks and Nvidia peaks and we begin to get confirmation of a reversal to the upside, ultimately, to have Nvidia come back 30% is typical to some of these larger moves that it has enjoyed in the past. It's typical to a swing low, which we've yet to have in a long time on Nvidia, and that would bring us back to $94. And so that's why $94, that and a number of other reasons, along with the fib and moving averages, is why $94 would be the spot that I would be looking to take a long-term buy if Nvidia gave us a decent pullback. Now, I could see Nvidia getting to $94 if we got to a peak of 5,500 on the S&P 500, and then we got a 10% correction there over the course of 2 months. I could see Nvidia coming back to that level. So I'm not saying that it's going to crash back there in the next week. I'm saying that if we begin to break down on Nvidia, I would be very patient and look for that lower price over the course of time. But to be clear, Nvidia is not breaking down. The trend is bullish, and so your positions on it should be bullish. Let me do a very quick station break for the Moomoo investment app. This is a zero cost to trade platform that specializes in options trading, and their current offer is pretty good. They'll give you up to 15 free stock, and if you just leave your money sitting in that account, they'll also give you 8.1% APY on any uninvested cash. Now, they'll give you 5 free stocks for a deposit of $100 and 10 free stocks for a deposit of $1,000, and the entire time it's going to earn that 8.1% interest. They've got no commission on options trading, stocks, or ETFs, and no option contract fees for equity options. They also have 100 technical analysis and drawing tools, which makes it one of the very best tools for retail traders who are using their mobile phones. I'm going to leave a link in the top pinned comment so you guys can check that out. Okay, let's talk about Tesla. If you have followed me, you know that right before the close, I jumped into some puts yesterday on the fear, the uncertainty, and the doubt that Elon's pay package would not get approved. Now, in addition to that, there were other technical reasons that I believed that we needed to go back and hit a lower price. Now, I'm going to take you guys into the charts. The chart is still, even with today's powerful move, the chart is still remaining within what I have called a indecision zone. It has not broken out. We're just at the top of that indecision zone. And we were just the other day when we were at 167 at the bottom of that indecision zone. And so I'm going to show you what it's going to take to get Tesla out of this pricing pattern. Kathy Woods came out with some commentary saying that the move was inadequate. I would agree that based on the positive news of Elon's being able to reposition the company in Texas, the corporate headquarters, and for his pay package to get worked out, I would have expected a much stronger move. And so I don't know if there is something behind the scenes that isn't understood, or is just the fact that the feds are remaining hawkish in the eyes of many investors, and this is a rate-sensitive stock. But we still don't have a definitive breakout. Let me take you guys into the charts so you can see what our targets are moving forward. Okay, so I want to point out that we have somewhat of a strange inverse bullish head and shoulders pattern with an angled neckline that kind of meets up at around $190. Now, if we're looking at the LUXALGO indicator, they've got a buy signal on Tesla right now on the daily time frame and a top target of around $206. And I would say that if we can open a candle tomorrow above 190 and above this yellow line of resistance, that this would be the breakout that we're looking for, and it wouldn't at all shock me if we went right up to $206. We do have a gap up today, and so this is a bullish move. But I will tell you that what I do see is that we are still largely in this sideways pattern that we've been in for quite a while. And so even though Tesla has had a nice move from the bottom of that range to the top of the range. We're still within this pattern and have yet to make a decisive move, giving us a perspective of what long-term direction would be. If we get this move above 190 tomorrow, then I would say that that would count as a true breakout move. Now, we would want to see one thing for that. We'd want to see two candles, okay? So this becomes more important when you're looking at a higher time frame and you're looking at a longer change of character move. You want to see two candles. And so tomorrow's candle would actually be the breakout candle because the last 2 days candles have just been within range. And so tomorrow's candle, if we open and close above 190, that would be the breakout candle, and that would give us a new, stronger buy signal on Tesla. Those are my thoughts on Tesla. I'm a big Tesla owner, a big Tesla buyer. I did get caught with the puts today, even though they have been most profitable position over the last couple of months. Taking it from that trend line down has repeatedly been like an ATM. Well, when it works until it stops working, and today it stopped working. So I'm going to be watching it very carefully for direction, and you guys will get more updates in the Stock Squad Patreon. That's the Discord. I saw a little piece of fluff go by me there. And if you don't know what the Stock Squad Patreon, that's myself, Keenan Grace, Stock Mo, and Stock Up with Larry Jones, answering questions, giving technicals, and giving hot plays. Guys, I appreciate each and every one of you. Let me know in the comment section how you did on Nvidia, on Apple, on Tesla, and if you traded Broadcom today. I'd love to hear from you. Hit that like and subscribe to get the next video. Thanks again. Peace and blessings. Take care.